Hello and welcome to this educational presentation of how to quickly identify the overall trend. Now I'd like to start out by sharing with you some statistics that may wake you up this morning. So let's start out with the facts, because the facts state that 80% of all traders will lose money. Okay? This means that 15% of all traders will just break even. And lastly, only 5% of all traders are consistently profitable. So let's just put that in simpler terms. Imagine there are 100 people listening today to today's presentation. 80 of you will fail and lose most of your nest egg that you've set aside for trading. 15 of you will just break even, put in a lot of hard work, but basically have nothing to show for it. And only 5 of you in the listening audience today will consistently be profitable. Now, if you want to see what that looks on a visual perspective, if we look at this pie chart, that red large space there, the pie, will represent the amount of traders that will ultimately fail. That blue slice will represent the amount of traders that will break even, and that small little green sliver there in the top right will represent the percentage of traders that will ultimately and consistently be profitable. So you have to ask yourself, how is it possible that the majority of all trading profits are captured by such a small percentage of traders? Well, let's look at a chart and let me share with you, because it's really simple. These traders that are consistently profitable are on the right side of the market. It's really that simple. All right, so let's look at that chart. Now, this is a chart of the spiders. This is the ETF that represents the S&P 500, okay? Represents what the market is doing. Now, in August to September, October of last year, the summer going into the fall, the market had a really nice upward move. And this is the way most traders trade. You'll finally get convinced that the market is going higher. So roughly around the halfway point, that's when you decide to get in. And you capture, let's say, this portion of the market going up, and it starts to go sideways, but it still has an upward bias. So you feel you're doing pretty well. And then this happens, okay? The market changes environment. It changes its personality. Now at this point, this is where you start trying to grasp onto things will make you feel better. Perhaps that $10,000 course you took says, well, there's major support right here. This is where all the institutions are buying. As you can see, this is where it's holding. So perhaps you buy some more, or at least you hold on to your current long position, even though it's not profitable anymore. At least you hold on to it thinking it'll come back. And then we all knew what happened at the end of last year, excuse me, coming into this year. So at this point, let's say roughly around down here, this is where most traders will bail. They'll jump over ship and sell their position. And if they decide to want to make it back, they'll say, well, you know what? This market's really falling out of bed. I'm going to sell. I'm going to actually go short, maybe buy some puts. So this is where most traders will ultimately get out, take a losing position, but try to make it back by going the opposite direction. And then this happens, okay? At this point, you're ready to throw your computer out the window. You say there's no way anyone can make any money trading the markets. It's just a rigged game. It's fixed against you. There's no way anyone can actually win. Well, in today's presentation, I'm going to show you how simple it is, how you could have been in sync with these major market moves. Not picking tops and not picking bottoms, because that's very difficult. And we're not here to tell you that we know of a foolproof, guaranteed way to get you out at the top and into the bottom. But what brings consistency in your trading is when you are in sync with the market at some point in time. So we ask ourselves, what if there were a tool that were automatically designed to put you on the right side of the market? Well, the good news is that there is actually a tool. And I'm going to share with you what that tool is and show you how simple it is to apply this tool on our platform. This is the PTS Primo Charting platform, the educational portal that teaches you how to be on the right side of the market. So, welcome this Saturday morning. I hope that woke you up, that little opening display there. My name is Steven Primo. I'm the president and founder of Specialist Trading. 10 years ago, I formed Specialist Trading with Pro Trader Strategies with one goal in mind, and that was simply to educate, to teach and educate traders. We feel the reason why most traders fail is because you're, as I showed you in there, the example, you're really a day late and a dollar short because you've taken yourself out of the game. You're relying on someone or something else to tell you how to trade. You go to a chat room, you go spend some $10,000 on some course where the institutions or the support and resistance to tell you where to buy and sell, but you're basically not relying on what your decision process is. You're relying on someone or something else. So we want to make you decide. That's why our only goal is simply to provide you with education. Even though we have strategies and methods for trading, they're simply there to educate you. We want you to pick and choose out of all the different variables we provide so that you can make a decision on your own. This, in my opinion, is the only way one becomes a consistent trader. And I should know, I've been trading for 4 decades now, 42 years to be exact. I've seen and traded just about everything out there imaginable. I know what works in terms of consistency. I know what doesn't. I started my career on the trading floor of the Pacific Stock Exchange, on the floor for 16 years. 9 of those years I was a specialist. That's where we get the name specialist trading. Specialist doesn't mean that you're any more special or that you have a special technique or a special system. It simply means a specialist is someone who specialized in making markets. So if you wanted to buy or sell a particular equity, for example, IBM, Waste Management, US Air, these were all stocks I made markets in. You had to go up to the trader who specialized in making a market. So I did that during the crash of '87 and the bull market that followed. So as I said earlier, I've seen and traded just about everything you can imagine. If you think it's brand new, it most likely is just being rebranded with a different name and a different technique, but it's been already out there before. So we're not, telling you that we have some system once again that guarantees you 1,000% and that you will retire in the next 6 months. All we're trying to do is instill education, instill the things that have stood the test of time so that you don't have to be searching for the Holy Grail, so that you can be out there and making your own decisions. So you'll see in today's educational presentation that we really stress how much educating you, and we'll really show you a technique today that hopefully will increase your odds for consistency. But before we begin, as always, we are required first to show you this, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results, a lot of real-time charts using this particular tool. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And remember, since we are an educational company, all examples are strictly for educational purposes only. Also, I'd like to take this time to invite each and every one of you, if you haven't done so already, to follow us on Twitter. I post a lot of different educational information on a daily basis, anywhere from snapshots of charts, of signals that our strategies have generated, to little bits of financial wisdom. Lots of free education on our Twitter page, so please feel free to follow us on Twitter. Okay, so once again, as I stated in the opening statements, we are a little bit different from other webinars you may have attended, and the fact that our only goal is to educate you. Sure, we have strategies, we have methods, we have techniques, but they're all there basically to provide you something to trade with so that you can decide how you want to trade. We're not telling you that we have this master system that you should only trade on a certain market, a certain time frame. I mean, that's silly. We want you to decide what time frame. We want you to decide what market. We're just giving you high probability setups generated from these techniques and methods that have stood the test of time. So our goal is not to force feed you signals. Our goal is not to tell you the perfect market. Our goal is simply to teach you how to trade with the specialist edge, okay? Now, since this is a classroom, once again, please feel free to ask questions, but please wait till the end of class. We're a little bit different, once again, from other webinars. If we stop at every slide, we'll be here far too long, and I have a lot of current charts to share with you, and I also really want you to understand this process. And many times, if you wait till the next slide, your question will be answered. So please, if you joined us late, we have a good crowd here today. Wait till the end of the presentation, probably the next 20, 30 minutes, and then we'll reserve the remaining portion of the webinar for questions, okay? The only question I always answer at the beginning is the most common one, so I want to get this out of the way, and that is this being recorded? Yes, it is. Many members, we feel lots of times have technical issues or they have to leave early. Don't worry, we will send each and every one of you a link to this recording, so if you do have to leave early or have technical issues, many times if you just log off and log back on again, it's your internet connection. But if you still can't see the screen or hear my voice, we will send you all a link to this recording, okay? So as I stated, we have a good crowd here today. If you have a question, please wait till the very end when you're prompted, okay? All right, so with that stated, let's begin today's Saturday morning class. Okay, so we asked the question, what if there were a tool that was automatically designed to put you on the right side of the market? Remember, we stated that most people lose money because they're out of sync with the market. So is there a tool that can do this? At least, help us. Once again, not guaranteed to get you in at the bottom and out at the top, but just something that had a high probability of at least putting you on the right side so that you weren't thrown off balance and surprised by a sharp downturn or a sharp upturn. Well, actually there is. It's called the buy-sell line. This is probably one of our most powerful tools we have at Specialist Trading and Pro Trader Strategies. And guess what? You don't have to spend thousands of dollars trying to upload it on your computer. You don't have to figure out some really complicated formula. In fact, you already have the buy-sell line because all the buy-sell line is the 50-period simple moving average. The trouble is most people apply this incorrectly. So I'm going to share with you how my mentors taught me how to apply this. This was 42 years ago, and this is something I use on a daily basis. I've used this every day, regardless of what market, regardless of what time frame I'm trading. On every trade, I use the 50-period moving average. Here's the proper way to apply it. You may want to write this down. In order to use the buy-sell line properly, remember the buy-sell line is simply the 50-period moving average. All you have to do is ask yourself this question before each trade, but you must ask yourself this question, and that is, where is price in relation to the buy-sell line? Okay. In fact, I would suggest that you write that question down, put it on a little Post-it, and put it on your computer screen. Because most students, when they first hear this lesson and they look at it and they go, wow, this really works, and then they forget about it once they go to another webinar and someone has a perfect idea how to pick tops and bottoms, and then it all goes out the window. And then they'll try that for a little bit, and it'll work until it fails miserably and they lose a lot of money and they say, wow, what was that question Steve said I should ask myself? So I would write this down. Remember, this is one of our most powerful teaching lessons we have at Specialist Trading and Pro Trader Strategies. Always ask yourself, where is price in relation to the buy-sell line? I don't care what method you're using. I don't care if it's based off of support and resistance. I don't care if it's based off of moving averages or fundamental analysis. I don't care if it's based off the full moon. But whenever you get a signal, ask yourself first, where is price in relation to the buy-sell line? Ask this before you pull the trigger, before you enter into the trade. Because if you ask yourself this question, you'll only come up with two possible scenarios. The first one is, if price is above, then you will only have a buyer's bias. This means that if your strategy or system gives you a sell signal, but price is above the 50, the odds are against you that that trade's going to work out. You should only have a buyer's bias. In other words, your method should only be generating buy signals. That's the only thing you should be focusing on. Conversely, if you ask yourself, where is price in relation to the 50 and price is below, well, then you should only have a seller's bias. You should only be looking for sell signals. It does not matter what method you're trading. Trust me, I know this seems too simple. 42 years ago when I was first introduced to this, I thought that was the silliest thing in the world. This is too simple, but it is extremely powerful. Let me share with you what I mean here. All right, this is the updated chart of the spiders coming into this last week, and we notice how we had this nice upward slope, and then all of a sudden the market fell out of bed at the last portion of the year, and now it's been going straight up. All right, without trying to pick tops and bottoms, how could we at least found a way to be in sync? Well, all we have to do is apply the 50-period moving average. And once again, if price is above, we only have a buyer's bias. You see how you're in sync with this? Once we had consecutive closes below, roughly around this portion here, we now are no longer going to be interested in buying. We are only a seller. I don't care if you say, but Steve, this was a nice buy here and this was a nice buy here. Sure. And what if you had tried it again? You would have given it all back here. Okay? Now, as price is moving up, remember, this is not a system. This is not a strategy that says, well, Steve said the minute that price goes below, I sell. No, this is saying that you have a seller's bias. You still need structure. You still need some type of rules telling you how to get in. So this is not a strategy. It's not a trading method. It's a tool designed to get you on the right side of the market. So at this point here, the market's going straight up, and people are saying, well, gosh, Steve, I'm losing money because you said to sell. No, I said that you should have a seller's bias. This means that any signal that is generated should only be a sell signal. Now at this point here, this was in mid-January, we start to have consecutive closes above. Now you switch gears. So for the last 2 months, you have only been looking for buy setups. So anything you may have lost here on a strategy signal, guess what? Most likely you've been able to recoup it depending on how powerful your strategy is. So this is what we mean by becoming a consistent trader. We're not concerned with picking tops and bottoms. That's a gambling mentality. And trust me, I've been trading for 42 years. I only know a few traders who are able to do that on a consistent basis. The majority of traders, myself included, have a very difficult time picking tops and bottoms because it's too subjective. It's not easy to teach. Most of these people that are able to pick tops and bottoms have a really good feel. They have an internal chart of the market. But you can't teach that. Remember, we want to make you a consistent trader through education. So we have to be able to teach you things that are very black and white, that are very structured. And this is the most structured thing I know of that can really help you be in sync with the overall trend. Now, this works in any market, any direction, and any time frame. For example, let's look at a current chart of the same market, the spiders here, the ETF for the S&P 500, but let's switch to a monthly chart. Now, as we see now, on a monthly basis, with each one of these bars equaling a month, we say, wow, I should have been in the market the whole time, but how would I have known that? It's simple. You do the same thing. You apply the 50-period moving average based on 50 monthly bars. And we would have seen well in advance in 2011 that we should only have a buyer's bias. Should we be selling the market now? Absolutely not. The market's still above the 50. It doesn't mean we have to, buy at the market. It just means that we should be looking for buy setups. Remember when the market fell out of bed at the end of last year? Well, where was it the whole time it was going lower? It was still above the 50-period moving average. And I had a lot of people at the end of November, December asking me, saying, Steve, are we in a bear market right now? And I said, well, it all depends what time frame you're looking at. If you're looking at daily bars, well, yes, we're below the 50-period moving average. But if you're a long-term investor, you'd most likely look at monthly bars. And we're above the 50. So for the long term, things are still okay. So as you can see here, they have been okay. We bounced back up. Now, does this mean we're going to stay above the 50 for 10, 20 more years? We have no idea. We do not predict anything. Remember, we're an educational company. We're simply trying to educate you so that you can become a consistent trader. Now, this can all change in the next couple of months, but for right now, price is above the 50-period moving average on a monthly bar of the ETF for the S&P 500. So the market is still saying it wants to go higher. Now, all you had to do was go back here in the end of 2010, roughly 9 years ago, coming into 2011, and you would have known that you only should have a buyer's bias. So let's look at some more charts here. DVN coming into the end of last year. This is the way most traders lose money. They say, well, I took that course and it said there was major support here, so I bought it. And look what happened. I mean, how did I know it was going to go down that low? Well, no one knows how low or how high something will go. We can only try and be in sync with what the market is doing at the current moment. How can we do that? We apply the 50-period moving average. So there is no reason you should have been buying this. I don't care if some master trader on TV is telling you he loves this stock. I don't care if some class you took says this is major, major support. I don't care if there's some indicator that's telling you this is so oversold. It's never been this oversold before. You have to buy it at these lows because had you done that, you would have continued to lose money the entire way. The market was telling you it wanted to go lower, but you wanted to fight it. You see, we should be in sync with what the market wants to do. The market is our best friend. It's not something we want to fight. So if your best friend is telling you it wants to go to a lower price, well, then you just simply go with the trend of your friend. You don't want to fight it. Here's another example here. As we look at UA. Now, this is the way most traders, once again, trade. They'll see these little pockets of little short rallies, and they'll say, well, Steve, we could have bought here and on these little bounces, but most likely you would not have had the wherewithal to get out quickly because, these little bounces were short and very quick, and then they made lower lows. Even this one made a lower low eventually. You will be more consistent if you trade in sync. So if we apply the 50-period moving average, we knew well in advance when UA was much higher that we should only be shorting it. So at this point, we're not a buyer at all. We're looking to sell, and we could have sold at these little tops. These were all nice tops to go short. Why? Because price was below the 50-period moving average. Remember, you have to ask yourself, Where is price in relation to the 50-period moving average? If your strategy, if your system gave you a buy signal right here, I'm sure you're going to go back and say, well, Steve, look at it, it would have worked out really great. You're right. But if you had the wherewithal to get out quickly, that would have been great. But most traders don't do that. They'll sit and wait, and then pretty soon that turns into a loss. You would have done much better if you simply looked for sell signals on these little bounces, and you would have had some nice trades. Now, here's an example and a very important rule of this particular technique. Remember, it's not a strategy, this is a technique. Because many times you'll see an example like this. This is an older chart in CREE where, sure, we're kind of leaning lower, and then we're kind of just basically in a range here. We're not doing anything. So how do I decide? Well, the first thing we do is apply the 50. Now, coming into this chart here, we were well below the 50, so you should only be a seller. But look what happened here. We're kind of oscillating above and below. How do we determine what to do? Well, here's the rule of thumb. Look for at least 3 to 5 bars to close either above or below the buy-sell line before an overall trend is established, okay? Because many times you'll see one close above, and that's not enough to tell you, oh, okay, well, now the overall trend is above, and then it'll go right back down below. Or many times you'll see it close one day or one bar below, and you'll say to yourself, oh, well, this means I should look for sell signals. Well, that's not enough because oftentimes it'll bounce right back up. So you need to give yourself at least 3 to 5 bars, consecutive closes either above or below, to tell you what side of the market to be on. Remember, this is not a buy and sell strategy. It's not telling you to buy or sell. It's telling you what the market wants to do and how to identify the overall trend. Once you know the overall trend, then you can apply any structure in the form of a strategy or a system to that overall trend, and you will have a higher level of consistency because you are in sync. You are going along with your best friend. You're not trying to fight it the way, for some reason, we've all been taught. 42 years ago, I was taught to fight the market. If it was up too high, you have to sell it. If it's down too low, you have to buy it. I'm sure many of you are taught the same thing. You know, buy low, sell high. But it doesn't work that way because how low is low? How high is high? It's much simpler, and you'll have a much more consistent P&L if you're in sync with the market as opposed to trying to fight it. So as we look back at this chart, we see initially we were well below the 50, but at this point we start oscillating above and below. But let's count here. We are below at this point, but here we start to have a total of 1, 2, 3, 4, 5 closes above. So what is the market telling us? Not some guy in a chat room, not some guy on TV, but what is the market telling us? It's telling us, it's giving a huge clue that it wants to go higher because we had a total of 5 closes above. So now you know if you were short that you may want to cover your short, or at least you may want to tighten up your stop. Or if you're thinking about going short, maybe you want to hold off on that idea because the market is telling you there's a good odd chance that it may want to go higher. And as we look in the future, it was right. It was giving us a tremendous clue. Remember, there's no reason to spend tens of thousands of dollars on courses that will be a perfect system that justify whatever the market's doing. You don't need to do that. You most likely, whatever platform you're using, have a 50-period moving average. All right, let's look at MRK here. Now, when we say we want to teach you this, we're talking about consistency. I said at the very beginning that this is not designed to be 100% foolproof and that you're going to retire. Consistency means that you will have losses, that this will not work sometimes, but consistency means if you get back on the horse, many times you're able to recoup some losses. For example, here, an older chart in MRK, we are above the 50-period moving average. We have a total of 5 closes above. So this is telling us we're in an overall uptrend. So let's say your strategy based on this breakout above here is telling you to go long. Okay, so you have a couple of nice days where you made some money right here, but then all of a sudden it starts to go lower. And you say, well, I'll hold on to this position because, we're still above the 50, or maybe you got stopped out with a loss here. And you're saying, boy, this doesn't work very well. Well, look what happened in the future. We start to oscillate above and below, but actually, if we count the number of closes below, we have right here a total of 9 consecutive closes below the 50. So let's say you exited this with a loss. You're probably, licking your wounds and saying, this stuff doesn't work. I thought Steve said that it always goes in the direction of the 50-period moving average. Well, I never said that. What we're trying to do is instill consistency in your trading. 2 steps forward, 1 step back. So if, let's say, you got long here and you're still long, well, the market once again is giving you a clue. It's screaming, actually, that most likely it's going to go lower. And in fact, it did. It fell 8 points the next week. So the market, not some guy on TV or in a chat room, the market is always giving you clues as to what it wants to do. Why not just listen to the market? All right, now I know a lot of you are saying, well, sure, I'm sure you probably cherry-picked all these examples. How important is this? Will this really work in the long term, or is this, just something that works on stocks? How can it help me? Well, let me share with you the importance of the buy-sell line and why I have been using it for over 40 years now on my daily trading. And this can be applied to a 5-minute chart. It can be applied to monthly bars, as I showed you, weekly bars. It can be applied to Bitcoin, to currency pairs, to futures markets, to commodities. It makes no difference. All right, here's a chart of the Dow Jones Industrial Average. Okay, we have a really nice upward trend here, and then we start to falter. Okay, this looks a little bit familiar, but here's the one interesting thing about this chart is that if you look at the very bottom of our PTS Primo charts, this is October 1987. This is when I was on the trading floor of the Pacific Stock Exchange. All right. I know of a lot of traders that lost millions of dollars in October of 1987. Why? Because they weren't in sync with this simple rule. Let's apply the 50-period moving average. Now, coming into October of 87, these are daily bars, the market was above the 50. But what are we doing here? We're starting to oscillate above and below. The market closes a couple of times below, then it closes back above, then it closes more below, then it closes back above, then even more below. So if you don't have a clear-cut idea, at least at this point, you should be saying to yourself, it looks like the market is in some type of indecision here. If I'm long in my long-term portfolio, maybe I want to raise my stops, or maybe I want to reconsider about buying some more. Or maybe you might want to pull out of the market altogether because the market is telling you that it's not too sure about being long. It's trying to make up its mind whether it's going to hold here or go lower. But we've had a number of consistent closes below the 50-period moving average. This is the beginning of October, and then we all know what happened after that, okay? The crash of 87 would have been comparable to a one-day market drop of 4,000 points today. Would you like to be in the market long that day when it's down 4,000 points? And remember, this was the crash right here. This was the 19th of October. Look what happened 2 weeks prior to that. So you had plenty of time to get out of the market. Let's look at another chart. Let's look at a weekly chart of the spiders. Kind of the same thing. We have a nice trend above the 50. Then we start to oscillate above and low. We're having trouble here. So the market's trying to give us a red flag warning here that we may be running out of steam. But guess what? Once again, looking on the PTS Primo chart, the date, we're looking at January 2008. Anybody remember what happened in 2008? Well, the market was giving us clear-cut signals that it may be running out of gas because we had consecutive closes below, a few closes above, and then more closes below. Well, on this weekly chart of the spiders that represents the S&P 500, this would have been a real big warning that maybe you may want to get out of the market or tighten your stops because we all know what happened after that, the beginning of the 2008 financial crisis. Okay, do you see how this tool could have helped you tremendously? You don't have to buy some expensive indicator that you have no idea what it's based off of. You don't have to go to some chat room or trading room and figure out what the guy's trying to tell you, that he must know everything, right? You just have to listen to the market by applying the 50-period moving average. Now, I want to share with you some real-time charts. We don't usually do this, but I want to share with you some charts that are very recent coming into this last week by showing you on our platform how you could have spotted these trend changes. And I'll ask you for different charts that you're interested in looking at so we can see where these actual charts are in relationship to the buy-sell line, okay? This is the PTS Primo Charting platform, the platform that teaches traders how to be on the right side of the market. Now, before we go into the platform, please take one last look at our disclaimer here. I'm going to share with you a lot of charts that are very update and very, close to the last day of trading. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And once again, since we are an educational company, all these examples I'm about to share with you are strictly for educational purposes only. Okay, with that said, let us go now let's go back here. I'm sorry, I kind of jumped the gun, to the platform. All right, here is our platform right here, and we have a current chart of the S&P ETF, which is the spiders. Now let's look and see how this could have helped us. In November of last year, about 3 or 4 months ago, look how we were below the 50. All right, we had one day close above, and then look what happened after that. So do you think this could have helped you? All right, now obviously we started to rise up here, but remember, your strategy has to generate a sell signal. This is not a trading system. And right here in the middle of January, we have a total of 1, 2, 3, 4, 5 closes. So at this point right here, you would have known to no longer have a seller's bias. You would have only had a buyer's bias, and any losses you may have accrued right here you could have easily recouped a little bit more if you went long, because look how the market has continued to go higher and higher. Do you see how simple this process is? This is a current chart of the spiders. Let me look at some more examples here. Let's look at BBY, okay? In our platform, you just click it on into our updated box here, and we start to see the same process, how we were below. And right here, we had consecutive closes. Now, a lot of people see when stocks gap up, they go, gosh, I wish I could have been. How did I know that thing was going to take off like that, or that news was going to happen? The stock was trading at 58 or 60, and then it goes up 10 points. Okay? Well, listen, no one knows what's going to happen. No one knows when announcements are going to be made. We didn't have any idea that this was going to gap up 10 points. But what was the market telling us? Remember, the market's our best friend. It was telling us well in advance, a month in advance, that you should only be long. See, most traders do the opposite, and they say, boy, this is running out of gas. Look at this. We're heading into some major, major resistance. I got to sell this. And then they wind up losing a lot of money. Okay? If we're above the 50, you should only have a buyer's bias. Now, what if we're looking at the opposite? Okay, let's look at another example. NKC. All right, well, right here, we were above the 50, and then at the end of, or I should say middle of December, we had consecutive closes. So at this point, you no longer want to even consider thinking about being long this stock. And it's basically holding. So a lot of people would say, well, Steve, this is major, major support. Look at this. This is where all the institutions are buying. It's starting to curl back up. I think we're going to go back and make up new highs. Okay, so you purchase right here based on what some guy says in a trading room. First thing I always teach you, where is price in relation to the 50? Price is below. So the only signals you should have a bias for are sell signals. Now, what if you had gotten a sell signal here? Don't you think you would have done very well on that? Okay. The entire time we're starting to rally. And look what we have here. We have a total of 1, 2, 3 consecutive closes now above the 50 coming into this past week. Does this mean you should buy at the market? Absolutely not. And someone would say, well, why, Steve? You said that you should have a buyer's bias. Yes, you should have a bias for any signal that your strategy or system is generating that is to the upside. But it does not mean you buy at the market, because we could just as easily all of a sudden on Monday come down here. So you have to only use this as a overall trend determining tool. Okay? Let's look at Apple. Okay? Some people are asking about Apple. If you have a stock you're interested in, just type it into the question and answer box, and I'll look at it. Now, same thing here. Look at this. We were well below the 50 period moving average, so all signals should be to the downside. And then at this point, we have 1, 2, 3, 4, 5, and we've had consecutive closes above the 50. We continue to go sideways. So nothing much has happened. We're just basically in a holding pattern. But should we think about shorting this? Absolutely not. So I'm sure someone would say, well, then Steve is saying that we should only buy Apple, so why don't we buy it right now? No, I'm not recommending anything. We are not an advisory service. We're simply an educator. And I have seen over time, the same way my mentors taught me, that you will have a higher level of consistency if you are only having a buyer's bias in Apple right now. Okay? Now, if you want to go to a higher time frame, let's look at a weekly chart of Apple. Okay? It's so easy. See how simple things are here? Well, on a weekly time frame, look how this helped us. We were doing really well until the beginning or middle of February, and on that time frame, we are still below. Now, I know a lot of traders will say, well, okay, Steve, so that means that I have to have the 2 time frames in sync. So if the weekly is below and the daily is above, then I shouldn't do anything because I have to wait for the daily to go below. I want to wait for those 2 time periods to be in sync. Listen, that's up to you. in my 42 years of trading, I found no consistency with that method. To me, it's a myth. I have never seen any higher levels of consistency if I trade 2 time frames at a time. Having said that, am I telling you that you should not do that? No, because once again, we're not telling you how to trade. We're simply sharing with you high probability setups. So if that works for you, great. In my opinion, if you're asking me, do I use that? No. The only thing that has done is serve to keep me out of some really nice setups. For example, if my strategy generated a buy signal in the daily Apple, but I said I can't take that because the weekly is below, well, what if Apple goes straight up? Well, I guess I missed it, right? And I found that over time that I miss a lot of trades. It's not guaranteed, but it's just my style of trading. Remember, we want you to decide. So if you decide that you should use 2 different time frames, then fine. No one's stopping you. If you decide to say, hey, you know what, I'll just trade the time frame that the signal is generated on, then fine. There is no one right or wrong way to trade. The only wrong way to trade is when you put all your trust and rely on someone else telling you what to buy or sell. That is a recipe for failure. That's why 80 to even 85% of all traders fail. You're going to get yourself out of sync with the market. All right, let's go back to daily bars here. Some people are requesting me to look at some stocks. Let's see here. One of them is SE. Okay, so all you do is punch in SE, you hit apply, and, well, look at that. We were below the 50. Now see here how we oscillated above and below? This is what we're talking about. Now we had 1 close above, 2 close above, 1 close below, so not enough. We had 1, 2 close above, then back below. So this is why we say you need to have 3 to 5 closes. So even though we kind of oscillated above and below, we didn't have enough to tell us to go long, to look for long setups. Until here, we have 1, 2, 3, 4. Okay, that was enough to tell us we're looking for the buy side. And then when we went back up again, right up here, roughly at 13, this is giving us a real strong indication that we want to go higher. And look what happened, all right? Once again, students are always saying, gosh, Steve, how come I missed these things? I would have never, thought that you should be buying this. Well, we're not telling you to buy it. We're just sharing with you what the market wanted to do. The market was screaming to you that it was in an overall uptrend now. So if that's an overall uptrend, what should your bias be? It should only be from a buyer's perspective. So it's up to you if you want to buy, all right? Let's look here. Some people want me to look at TNET. Okay. TNET. Punch that up. The same thing. We're below the 50 this entire time coming into mid-January. We have consecutive closes. Once again, we're kind of just drifting higher, and then look what happened. All right. Do you see how simple this is when you are in sync with the overall trend? The trend is not something to try and fight or to try and swim upstream, all right? The trend is something to go with. So you will have higher levels of consistency. The only way you would have lost here in the last month is if you were trying to sell. Why would you try to sell this? The only thing you should be concerned about is buying right here, okay? Now, if we want to look and see what something should be for selling, let's look at HAE, okay? HAE. At the same time period, what has this stock been doing? It's been going lower. And someone would say, well, how is that possible? Why do I always buy the ones that go down when the market's going up? Well, did you apply the 50-period moving average? The 50-period moving average is telling you that you should never have bought this. So many traders, I'll say, Steve, I've been trading for years, and it seems like the market, when it takes off, I'm ready to go. I long everything, and all my stocks go down, or all my, issues go down, or the vice versa. I'm short everything. I was waiting for that big sell-off. It finally happens, and my stocks don't move down. In fact, some of them even went higher. Most likely, it's because you're out of sync with the 50-period moving average. So you see, traders love to play the victim game. They love to say, boy, this stuff doesn't work. I spent all this money, and this guy really screwed me over. If you apply and, once again, are in charge of your own trading destiny, you never have anyone to blame, because you're in charge, all right? Take responsibility. And the reason why traders don't take responsibility is they don't want to take the time to learn so that they can do it themselves. Well, guess what? You now have pro trader strategies and specialist trading taking the time to educate you so that you can make your own trading decisions. So right here in HIE, you would not have been, licking your wounds saying, boy, everybody's making money except me. Well, no, because you never would have bought this, okay? Just have time for a few more. Let's look at CDNS. Somebody's asking about CDNS. Whoops, CDNS. And this is all on our platform. You see how simple this is. Wow. Here's an example here of where we're oscillating above or below. This is where it's very difficult to figure out what to do. But remember, just because it's oscillating above and below does not mean you would lose money, because you have to still have structure in the form of a strategy. Now, at this point, you had a number of days below the 50, so this may have generated some type of a loss because you were well below the 50 period for an established amount of time. But at this point, we've been above the 50 for a long time, telling you to exit that a short trade, and now you could look for a number of buy setups. It gave you plenty of time. From January, February, coming into March, you would only be looking for long setups. It's time for a couple more here. Let's look at QCOM. Someone's asking about QCOM. Okay. Well, once again, if you've been scratching your head saying, why is everything else going up when my stock's going down? All you had to do with QCOM was apply the 50 and ask yourselves, where has price been in relation to the 50? This entire time, price has been below. Now, on Friday, yesterday, we had a close above. Is that enough for us to say, wow, it's time to get long QCOM? Absolutely not. All right. You had one close above right here, and then look what happened. Now, we're not saying that's going to happen, but you have to give yourself a little bit more confirmation. Remember, 3 to 5 closes above would start to get you to think that most likely we're going to go higher. And if I'm short, better be careful. Or if I'm thinking about anything, I should have a buyer's bias. That's how simple this is. It makes it really simple. Time for just one or two more. Someone's at USNA. Is that what that is? USNA. Be honest with you, I don't know what half of these are. I just basically look at the markets. I don't really care. You know, as you've noticed here, we haven't talked about fundamental news or earnings or what the institutions are doing with these stock or who the CEO is. I stopped looking at that stuff 42 years ago. So a lot of times when students ask me about stocks, I say, I have no idea. I don't even know what they do. And they say, well, Steve, don't you need to know what these stocks do? And I said, I personally don't. If you want to, sure, but it's not in any way required. So when students ask me to look at stocks, I just look at the price because I, am just familiar with what price is doing. So as we look at, what was that, USNA? Well, we were above the 50. Most likely if you did something that would have been very short-lived. You would have been having to be very quick to get in and out of this. But at this point right here, this was in mid-December, all the closes, majority of closes were below. We had one close above, and then look what happened. We had another close above, look what happened, okay? Close right on the line. So you see the market trying to tell you that it doesn't want to go higher, even though it's pushing up against this 50. It's not magic. It's just a very high probability tool. All right, so it pushed and touched against it for so long, but then eventually went lower. And this was coming into yesterday. So while other stocks are making new highs, look what this stock is doing. This is where, once again, traders love to play the victim game and say, how come everybody else is going up and mine's going down? Well, look at where price has originally been for the last 2 months. It's been below the 50. So that was your fault. That's not somebody in a chat room that you listen to, or that's not some institution's fault. That's your fault. You have to be in charge of how you decide how to trade. And I've provided you with a very powerful tool to do that. Now, I'm sorry, we're going to close up and go towards the end of this. I just have time for one more. Someone's asking me about GH. Is that what that is? GH, okay. We'll look at that. Oh, this is a perfect example, okay. And I don't think this has been around too long because the 50-period moving average only starts right here. So this is probably a brand new issue. But at this point right here, at the end of November, beginning of January, we started to see consecutive closes above. So at roughly $40, this stock was telling you, I most likely want to go higher. How high? I have no idea. But at the point we looked at this, it was roughly about 40, 42. Now the stock is pushing 75, 80. Okay? Did we know it was going to go this high? Absolutely not. But because of the 50-period moving average, you knew that you should only have a buyer's bias. So this is how simple and how powerful this tool is. These are real-time charts. These are all up to date from yesterday's trading. Now, obviously, there's going to be some instances where it will get you in a whipsaw area, and sometimes it'll go long or should be with a buyer's bias for a couple of weeks and then go strictly down to the seller's bias and then go right back up. Sure, those are tough markets. But remember, it's about being consistent. You will have losses every once in a while, but we're trying to instill this consistency in you. I'm sorry, we have to switch back now because we're running out of time, but trust me, this is something you can start experimenting on your own. Why? Because you don't have to spend tens of thousands of dollars and say, well, gosh, Steve, do I have to buy this platform in other words to check it out? No, you can do this on your own right now. So as we move back and we take a look at our disclaimer, you shared a lot of performance results, but remember, we can in no way guarantee that any of the results will be repeated in the future. The examples I shared with you right now were strictly for educational purposes only. So as we conclude, I want you to go back and research your last 10 to 20 trades, okay? I can almost, not certain, but almost guarantee you that you had losses because you were out of sync with the buy-sell line. All right, so go back and do the research. See how powerful and see how this tool could have helped you. Remember, this is not something that I just came up with a couple of weeks ago. This was something my mentors shared with me over 4 decades ago. And they said the market, not some guy in a chat room or a trading room, not some institution, not the volume, and not some fundamental news, but the market, the chart in front of you is always telling you what it wants to do. So your job as a trader is really simple. You don't have to overanalyze it. Your only job is to listen to the market, and I taught you how to do that right now, and then jump on board in sync with that market. That's it. Our job is really simple. We don't have to figure out what the earnings are going to be. We don't have to figure out the estimates. We don't have to figure out where the support and resistance is. We don't have to get some indicator that we have no idea what it's based off of that picks tops and bottoms. This is all silly. And once again, I wasted tens of thousands of dollars doing this, spending money on this 42 years ago. So it didn't work then. It's not about to change and miraculously start working now. It's so much easier if you learn how to listen to the market. And I taught you one of the most powerful ways to do that today. So let's recap before we go into question and answer. Remember, apply the buy-sell line to all your charts. What is the buy-sell line? It's the 50-period moving average. I don't care if you tick trade the E-mini futures the way I do. I don't care if you look at long-term investments with monthly charts or even yearly charts. You should have a 50-period moving average applied on that. But here is the most important thing. We're not concerned with moving average crossovers. We're not concerned with the slope at this point. All we're concerned about is a question you must ask yourself whenever a signal is generated. I don't care what it's based off of. It could be the tides of the ocean or it could be based off the earnings. It makes no difference. But when a signal is generated, ask yourself this question, and that is, where is price at this current moment in relation to the buy-sell line? If it's below, I don't want to take any buy signals. Sure, you may have a great buy signal and it'll work fantastic. I always get emails from my students saying, Steve, I had a buy signal. I didn't take it because it was below and I would have made a lot of money. Gosh, you kept me out of a good trade. Well, sure, this happens a lot. But remember, it's all about consistency. We're trying to instill consistency in you so that you can be trading 20, 30, 40 years down the road. I'm not trying to teach you a fly-by-night method so that you'll have one great month and then give it all back. I mean, what kind of a teacher would I be if I instilled that in you? I'm trying to instill things that will have you trading for a long period of time, and that's what this does, okay? All right, so we have a great discount for all the attendees today. We're going to offer you our platform. This is the PTS Primo Charting platform, the educational platform that teaches you how to be on the right side of the market. Now, I know a lot of you are saying, well, Steve, I have a 50-period moving average. What do I need this for? Well, you have so many more opportunities with our platform. You're getting 40 years of experience and trading ideas in one spot for you, and everything is one click away. 30 days for only $7, okay? Let me share with you what you get for this trial offer, okay? On the PTS Primo charts, we're obviously going to throw in our enhanced buy-sell line. Now, a lot of you say, well, enhanced, what does that mean? I thought it's just a 50-period moving average. Well, let's look at this chart here, all right? It's an older chart in HBQ. Using our platform, all you have to do is click on the buy-sell line in the upper green strategy tab corner, and then you get a drop-down menu. Now, obviously, the buy-sell line is the 50-period moving average. We have different enhanced ways of viewing that. Let's take our most popular, which is the fluid. Once you do that, when you click on the fluid, it automatically changes to the fluid format. And that is basically saying that anything above the 50 is blue, anything below is orange-red. Remember that old adage, the sailor's adage? Well, we changed it now to read blue sky at night, trader's delight. So in other words, now you know with a blue background you should only be looking for buy setups. Red sky at morning, trader take warning. Anything below should be from a seller's standpoint. And another great thing about this particular enhanced feature is that it really pinpoints the slope of the 50-period moving average. And this is where many times, not guaranteed, but many times we found, and our students have told us, that these are where some of the best setups are generated. So you may just want to say, well, when we're going to go sideways to flat, I won't do anything. But once we get into this nice slope, here's where I'm going to start looking for my strategy to generate signals. Same thing to the downside, okay? Here's that older chart of GE we looked at before. We click on the buy sell line, the drop-down menu appears. Let's click on fluid again, and in a matter of seconds, the screen changes color. So we know now that we should always have been short, even though we had one close above, one close below, 3 closes above, right back down again. And as we see, the slope here is oftentimes we get those best generated shorting signals. So that's included. You're getting the enhanced buy sell line. We're also going to include our top bottom 25% feature. This is a feature based off of pattern recognition that oftentimes can signal the short-term trend. Now remember, we just talked about the overall trend. Now we're focusing on the short-term trend. That's also included. But we're also going to include with that the strength of trend feature. This is a new feature I developed and designed with ProTrader Strategies that oftentimes can tell you the strength, even if you're in an uptrend, it can tell you if that trend is dissipating or not. Or if you're in a downtrend, it can tell you if that trend is dissipating to the downside. You know how the market has been rallying up and really nicely this last month or so? Well, this great feature was showing our students at the end of or middle of January that that downtrend may be running out of steam. It may be time to cover your shorts. This is a great, great tool, and it's going to be yours on the platform. We're also throwing in our signal scanner. All right, you can scan for the buy-sell lines for these top bottom 25% feature on a daily basis, and you'll have them all there in front of you. We offer over 90 of the most prominent technical indicators. I realize that I have a technical bias and our platform has a technical bias. Remember, our job is not to tell you how to trade. Our job is to furnish you with information so that you can decide how to trade. If you like information that's fundamentally based, well, guess what? We're offering you free Bloomberg TV. Anytime there is a real time announcement, earnings, any type of employment figures, anything you're interested in that has a fundamental bias, our Bloomberg TV will have up-to-date announcements, and while it's happening live, real time. For example, on our platform, you just hit the media page, and you'll see this window appear on the platform. It's live Bloomberg TV. Any announcement, any earnings report that's coming out live, you will be privy to it as it happens. That's also included. And lastly, great personalized tech support. We have a lot of testimonials from people who are on our platform saying the tech support is fantastic. I didn't know how to load a chart, or I didn't know how to click on the media, or it wasn't coming on properly. We'll be there in a matter of seconds to resolve any issue that you may have. Remember, this is a great platform, 42 years of experience of trading knowledge, all in one easy-to-use platform. We specifically made it easy for you so that you could be on the right side of the market. So 30 days for only $7. After 30 days, you can decide for yourself if you want to stay on board. I believe people are asking about what it goes up to after that. We'll get to that in just a minute, but it's still very inexpensive, and there are a lot of different discounts. So here's the information to take advantage of this great trial offer on our platform. Contact ProTrader Strategies. I designed and developed a platform with them. We made it specifically simple for you, so it doesn't matter your expertise level. If you're trading 30 years or even 30 minutes, it makes no difference. It's easy to use. If you want to contact ProTrader Strategies for some more information, the best thing is to call them directly at area code 310-598-6677. Now that link at the very bottom will take you to the sign-up page and more information. But you see, it's not a live link. We've pasted a live link on the chat box on the far right-hand corner. So simply go there and it will automatically open up a page for you, okay? A lot of people are asking questions, so let's get to them really quickly while we still have a few moments left. People are saying, is this a 50-period exponential or a simple moving average? That's a very good question. It is a simple moving average. Now, having said that, you are always free to use any amount of length. You can use a 20 if you'd like. You can use 100. In my opinion, over using this for 42 years, the 50-period moving average, the simple moving average, is the best in terms of consistency. In other words, if you're using a 10 or a 20-period simple moving average, that's great, but that's only great for the short term. Conversely, if you're using a 100 or a 200 period moving average, those are great. Those are still work fine, but they'll work fine for a longer term. What we want is one tool that works well in all time frames, in all markets. We don't want you switching and going and saying, well, now I'm looking at weekly charts, so I guess I have to change the buy-sell line. It's simpler if you keep things the same and you just change whatever market, whatever time frame, and that 50-period moving average is static. So feel free to experiment, but I think you'll find nothing better than the 50-period simple moving average. The main thing I want to instill in you, though, is it's not so much about the length. It's more important about how you use it, which is meaning that it is always important to ask yourself that question. Where is price in relation to that? That's the important thing. If price is above, you're only going to be having a buyer's bias. If price is below, you'll only be having a seller's bias. That is the main key to applying the buy-sell line, okay? Maria asks, does this charting system work for the Mac? Well, remember, this is not a system. This is not a strategy. This is just simply a tool. And yes, you can, if you're looking for the platform, I believe there are ways, but I would contact Pro Trader Strategies for help with a Mac, okay? But it shouldn't be that difficult. It really shouldn't be, all right? Steve, can the 50 be used for scalping, day trading? Yes, that's what I use it for. When because of my schedule, I'm giving webinars on a daily basis or contacting my students. I don't have time to every day. Some days I can't even trade. But when I do have a free moment, I like to day trade. And I'll use the 50-period moving average on the intraday E-mini futures charts. Now you can use it on 5-minute charts, tick charts. It doesn't make any difference. So yes, it can be used in any market, in any time frame. Now I know I didn't get a chance to go over a lot of these charts, but remember, most of you have a 50-period moving average on your platform right now. Feel free to go back and experiment. In fact, look at your last 10 to 20 trades, as I said earlier. Most likely you lost money because you were out of sync with this. Now, someone would say, well, Steve, why would I get the platform when I can just do it on mine? Well, sure, you can. But remember, we're throwing in all these other tools. You're getting the Bloomberg TV. You're getting the top bottom 25% feature, which is an amazing feature for determining the short-term trend based on pattern recognition. You're also getting all the different enhanced ways to use the 50-period moving average, that fluid buy-sell line, the background feature, and also the color ribbon, which we didn't go over. You're also getting the scanner, where you can scan for these on a nightly basis. Wouldn't it be great to scan to see which stocks were above and which stocks were below? You could look through your basket of stocks that you like to trade. Or you're also getting that strength of trend tool. This is a tremendous tool that really opens up your eyes as to when a trend may be running out of gas. These are all great things, including others that I haven't gone over yet, that are all included for 30 days. And trust me, for $7, I would almost guarantee that most of you lost more than $7 just trading in the markets last week. For $7, the price at some places for a cup of coffee, $7, you're getting 30 days of information that's taken me 40 years to accumulate. So I can't think of a better way to get acquainted with us. And remember, we're there with you every step of the way. Technical support or even ideas that you're not sure of how to use, you can always email me and I will answer any question you may have. So take advantage of this great trial offer. You saw the attention I give to detail and trying to educate you. It doesn't change once you become a student of ours by using the platform. We still want to educate you tremendously. So you just see our level of importance that we put into all this education. We're not here trying to tell you we have a system that never loses money the way some other webinars do, or we have a method that will have you retiring in 6 months. We don't believe in that. You are in charge of your trading destiny, not us. Our only goal is to educate you, but we're there with you every step of the way, okay? So as we conclude, remember, here's the information once again. If you're having any questions, just contact Pro Trader Strategies by calling them at 310-598-6677. They will be happy to answer any question you may have, okay? As we close, I hope you learned something today. You saw how much importance I put into actually teaching you and how much I really want you to become a consistent trader. So why not join us by becoming a trial member of the platform and try to make your trading consistent for 2019. Thank you so much. I'll see you next time. Have a great weekend. Bye-bye.